What's up, guys? Welcome back to another episode of Investeen hosted by me, Rishi. In this episode, we're going to be diving into the sixth letter of CANSLIM, and that's I, and it stands for institutional sponsorship. And so the entire purpose of this video is to teach you guys how to find the stocks that are catching the eyes of these huge institutional funds who inevitably move the price of a stock up because of their immense buying power. Let's get into the video. Alright, so there are tens of thousands of institutional investors who have portfolios in the hundreds of millions or even billions, right? And so these are huge numbers. And with portfolio sizes like this, institutions are the ones who have the majority of the control when it comes to changing a stock's price. And it takes a great amount of buying power or demand to actually trigger a price move for these companies. In fact, institutional involvement accounts for around 70% of price movements for leading market picks. When we look for market winners, we want to see them being owned by a large number of funds. And obviously, this does depend on how recent the company IPO'd or the size of the company itself. And when a company goes public, it's less likely to immediately have hundreds of funds lined up to purchase large number of shares. In addition, smaller size companies are less likely to attract the interest of a vast number of institutional investors right away. However, it is important to look for some signs of sponsorship as it shows market confidence for the future of the company. And if a stock has no sponsorship whatsoever, it may mean that many institutions have passed over the stock in search for a real winner with more potential. Across the various fundamental data and metrics that are being analyzed throughout CANSLIM, one thing has repeated itself in what we search for. And apart from the actual number itself, we want to be looking for the metric to be increasing at an accelerating rate. And so for quarterly earnings, we never really focused on the EPS value itself, but actually instead how much it's growing by, right? And so the same applies for sales, profit margins, and more. And in the case of institutional sponsorship, we want to be looking for a decent number of funds depending on the size and age, but more importantly, showing an accelerating number of funds showing interest. And funds that have made recent investments into a stock, as William O'Neill says, are more likely to keep adding positions going into the future. Speaking of funds, following the best growth funds in the market gives us insights to their strategies and what's working for them. IBD's Market Surge offers a fund rating from A to E, with A representing the most well-managed growth funds. And IBD also offers a list of funds in the top 20 of all funds called the IBD Mutual Fund Index. And stocks that have sponsorship from funds in this index should be analyzed further and considered, due to the fact that these managers have created some of the best long-term track records in terms of returns. And these top 20 are so important. William O'Neill himself said that regardless of the number of sponsors, he wants to see that at least a few of his top 20 funds have shown interest. And the most recently updated list includes Fidelity Contra Fund, Janus, and JP Morgan Large Cap Growth Fund. A super large concept that people don't know about is the fact that a stock can be overowned or have too many institutional investors. Big name stocks who are creating hype from traders all around the world may have gotten so many institutions on board that it would be too late for anyone else to come and enjoy the wonders that the stock had been providing previously. And it's like a good orange. Sometimes all the juice has been squeezed out of a fruit that had previously held so much value. And now it's just a pulp and there's nothing better that can come out of it. When a bear market comes or something goes wrong with the company's performance, extreme selling pressure will occur as so many of the 1,000 funds piled up will start dropping positions. Just make sure to understand that just because thousands of investors have already sponsored a stock, it doesn't mean that this is the perfect time to invest in that stock. And you always want to ride the wave to the top, not enter while it's already at its peak. Now, it's time for my favorite part of the episode, which is just looking at some stocks to actually apply these concepts to. And so one stock that's been holding surprisingly well is MELI, which is an e-commerce business facilitator based in Uruguay, but incorporated in Delaware. And so amidst this huge market crash, it's not taking too much damage and it's having volume surges and really great EPS growth as well. It's at the top of its industry and has a nice return on equity at 40%. And so funds have been steadily growing as well. And so if we check the owners and funds, we can see that some of those predominant funds that I mentioned before, like Fidelity Contra Fund, JP Morgan, and Janus are all present. And over 800 institutional investors have added positions since June of 2022, and it's super obvious that it contributed to the growth of the company as the price has risen like $1,100 since then, and in that trough period right here when it was at a low, right? And so really liking this upward trend, dominance it's holding in the industry, and also like the resistance against the selling pressure of the overall market right now. All right, so the last stock that I want to look at is a stock that we can say recently IPO'd. And so, as I said before, we still want to see some sponsorship for stocks that recently IPO'd, as it shows their potential for growth and also like market validation. And so the stock is called Samsara with a ticker of IOT, and it is a real-time connected operations platform based in San Francisco. And so since December of 2022, it's added almost 500 funds as owners, which also took a large role in moving the price up from sub $10 around here all the way to $35 as of right now. And so it's pretty solid fundamentals for an IPO, and it seems to be holding up pretty well during this market downturn. So I'm looking to see where this one's headed. Thank you so much for watching this video. In the next video, we're going to be covering the last letter of CANSLIM, and that's M, and it stands for market direction. After that, I plan on making more videos about charting patterns and technical analysis. See you in the next one.